Welcome to the deep dive. This is where we really dig into the key takeaways from the sources you share with us.
That's right.
Today, we're looking at some really interesting materials. We've got excerpts from Markel Corporation's 2018 annual report.
A significant year for them.
Definitely. And alongside that, we have this great list of questions, kind of a framework for exploring any company's story, really.
Right. Questions that get to the heart of things.
So our mission today, pull out the crucial bits from Markel's report. We want to see how they handle challenges, stay true to who they are, and, keep innovating.
And using those questions as our guide.
Exactly. All viewed through that lens.
It's actually a great combo. A corporate report, if you really read it, not just skim the numbers.
Yeah.
It tells a human story. There's real strategy there. It's more than just a financial statement.
I see what you mean.
And when you layer on those kinds of fundamental questions about their purpose, their journey, how they think.
The mindset.
Right, the mindset, the whole narrative just gets richer. So today we'll uncover Markel's core principles, what they did strategically in, well, a pretty tough year. 2018. And we'll definitely dig into this one specific thing, insurance-linked securities, or ILS, which had its share of drama.
Okay, sounds good. Let's start with their foundation then, this Markel style.
Ah, yes. The Markel style.
It's not new, right? Been around over 30 years.
That's right. Decades.
And it seems core values like integrity, being adaptable, always learning, humility, that's what holds their sort of diverse global businesses together.
Precisely. It's the glue. And it's not just words on paper. They seem to genuinely live it. What I find really interesting is their win-win-win idea.
Yeah, tell me about that. A great company, they say, has to benefit customers, associates, and shareholders.
Exactly. It's that holistic view. It's baked right into how they define success.
It feels quite deliberate.
Very deliberate. And think about it. Having a culture that's so clearly spelled out like the Markel style, it gives you an anchor. Especially vital when you're growing, as they say, for more people and in more places than ever before.
Right. It keeps everyone aligned.
It does. And that win-win-win thing, it genuinely pushes beyond just looking at the quarterly profits. It forces a focus on sustainable, shared value. It's a different kind of bottom line, really.
So if that's the foundation, how do they actually build this great company? They talk about three things: right owners, right people, and right strategy.
The three rights, yes.
Let's take right owners first. The report stresses needing long-term partners, avoiding short-term whims of market disruptions. They talk about sustainability, diversity, resilience.
Yeah, they're very specific about the kind of shareholders they want.
What's the real significance there? Why be so picky about owners?
Well, this right owners idea, combined with what they call their forever and right now thinking, is actually a huge strategic advantage.
Forever and right now. Explain that a bit.
It means they operate on two timelines simultaneously, making good decisions for today, the right now, but always through the lens of long-term value, the forever. And it's not just talk.
How so?
They tie most of their management bonuses, incentive compensation, to 5-year results.
5 years. Yeah.
So they're building a system where long-term thinking is rewarded. It lets them absorb hits, like they took in 2018, without panicking. They're playing the long game. That's rare.
That makes sense. Okay, then, right people. The idea is that the Markel style attracts the right kind of talent, people who value hard work, excellence, even humor.
Apparently so.
Yep.
And the numbers seem to support it, growing from, 7,200 people to over 17,000 in 5 years.
That's a huge jump.
It really is. Over 17,000 unique stories, as they put it. It shows that a strong, values-based culture isn't just, a nice to have, it's a magnet.
Attracts and retains people.
Exactly. People join, they feel aligned, they stay, they contribute, becomes this engine for growth. Culture as a real competitive edge.
Okay, and the third pillar, right strategy. They've had this diversification and specialization approach since, 1986?
It's a long time, yeah.
Diversification for resilience, specialization for expertise in niche areas. Sounds straightforward, but how does it work day to day?
Well, diversification for them isn't just about owning different types of businesses. It's about building a tough, flexible company structure, having diverse talent globally so they can handle shocks.
Makes sense.
And then specialization is about being genuine experts, not just dabbling.
Yeah.
Whether it's ensuring complex industrial equipment, understanding horticulture risks, medical services, or even, as we'll see, financial instruments.
Solving specific, hard problems.
Precisely. It lets them adapt and thrive no matter what, instead of being stuck in one area.
Okay, so you've got the right owners, right people, right strategy. Sounds like a recipe for success. But 2018 wasn't smooth sailing, was it?
No, definitely not.
Yeah.
They called it good, but not great themselves,
Yeah.
which is refreshingly honest.
Yeah. They hit record revenues, $6.8 billion. Sounds great. But they also had a comprehensive loss of about $376 million. That's a big swing from a $1.2 billion income the year before.
A very big swing.
And the captain's log, their commentary, it doesn't pull punches, talks about mistakes in certain areas, short-term mark-to-market declines in investments.
Which means the value of their stocks and bonds went down on paper, even if they didn't sell them.
Got it. So how did they react to that adversity?
This is where that continuous learning value really kicks in. They explicitly say, we learned immense lessons during 2018. They didn't hide from it.
What were the specific headwinds?
Two main things. First, another really bad year for catastrophes, hurricanes, typhoons, wildfires. The second year in a row with higher than average insured losses. That hit multiple parts of their insurance business.
What? Ouch.
And second, their investment portfolio faced headwinds. Rising interest rates, falling stock markets that hurt the value on paper.
So a double whammy.
Pretty much. But they stressed their resilience. They said they did absorb some painful lessons, yet we still earned reasonably good financial results. Again, they point to the longer view. Look at 5 years, not just one.
That long-term perspective again?
It's key to understanding them.
Beyond just weathering that tough year, the report highlights some big changes over the previous 5 years. Can you walk us through some of those transformations? Maybe starting with U.S. insurance, they moved away from silos.
Absolutely. These changes really show their strategy in action adapting. In the U.S., they shifted from having separate units, these semi-autonomous silos, to a more integrated approach. Meaning they wanted to offer customers any insurance capability they needed, however the customer wanted to buy it online, through their local agent, via a big broker. Seamless.
And did it work?
Well, premiums grew significantly there, from $1.6 billion to $2.1 billion. So it seems like it resonated.
What about internationally?
It's a similar story of growth and adaptation. They highlighted preparing for Brexit by setting up a German operation years ahead of time, ensuring they wouldn't be disrupted. International premiums grew nicely too, $826 million up to $1.1 billion.
Proactive move on Brexit.
Definitely. And then there's Markel Ventures. That's their non-insurance side.
Right, the collection of other businesses.
Huge growth there. Revenues basically tripled, $686 million to $1.9 billion. And operating profit, EBITDA, more than doubled, $84 million to $170 million.
Wow, that's significant diversification.
Exactly. It provides what they call courage and cash flow that isn't tied to insurance cycles or the stock market. It's a really important pillar.
And they acquired companies like Brahmin Leather.
Right. And they argue their culture, the Markel style, actually helps them buy these companies. Sellers trust them to respect the business's legacy. They see it as a strategic advantage in deal making.
Interesting angle. Okay, so steady evolution across the board. But you mentioned one area earlier that was maybe more dramatic.
Ah, yes. Insurance-linked securities, ILS. That was, in their words, the most dramatic transformation. Going from zero revenue to $92 million in 5 years, that is dramatic. Explosive growth. Their strategy involves buying key players, Catco, Nephila, State National, aiming to become the biggest single entity in the ILS market.
Okay, so let's unpack ILS. For listeners who aren't deep in insurance jargon, what is it? How does it work?
Right. Let's break it down. At its heart, ILS transfers specific, really big risks, think major natural catastrophes, away from insurance companies and into the capital markets.
Okay.
So imagine you're a big insurer. You're worried about a massive hurricane hitting Florida or huge wildfires in California. A single event that could cause devastating losses, maybe even threaten your solvency.
Risk of ruin, essentially.
Exactly.
Yeah.
You could buy something called an industry loss warranty, an ILW. This is a type of ILS.
How does an ILW work?
It basically pays out to you, the insurer, if the total insured loss for the entire industry from that specific event goes above a certain massive trigger amount, say $50 billion.
So it's not tied to your specific policies.
Correct. It's based on the overall industry loss. It's a way to hedge against those extreme systemic events. It helps the insurer stay solvent.
Okay, so that's the buyer's side. Who's selling this protection? Where does the money come from?
That's where the capital markets come in. Investors, hedge funds, pension funds, specialized ILS funds provide the capital. They put up the money to back that ILW.
Why would they do that? What's in it for them?
The premium. If the giant catastrophe doesn't happen or isn't big enough to trigger the payout, the investors get their capital back, plus the hefty premium the insurer paid.
Oh, okay.
And the big appeal for these investors is that the potential return is generally not correlated with traditional financial markets. Or Hurricane doesn't care what the stock market is doing.
Diversification for their portfolios.
Exactly. Diverse, independent cash flows. That's the attraction.
So Markel, through companies like Nephila and Catco, acts as the manager, connecting the insurers who need cover with the investors providing capital.
Precisely. They structure the deals, manage the cash, assess the risks, and collect fees for doing it, management fees, and often performance fees if things go well.
Can you give us a simple example, numbers-wise?
Sure. Let's say an insurer wants $100 million of cover. They might pay a $25 million premium for it. Investors put up the other $75 million. All $100 million goes into a trust.
Okay.
If no catastrophe triggers the ILW, the investors get their $75 million back, plus the $25 million premium. That's a 33% return on their $75 million investment. The report suggests this implies, maybe a 1 in 4 year type event.
Seems like a good return.
It can be. But, and this is but the report is very clear.
Yeah.
It's more complicated to do than it is to say.
Why? What's the catch?
The core challenge is pricing the risk. How likely is that 1 in 4 year event? What if it's really a 1 in 3 year event? Suddenly the investor returns look very different. What if it's 1 in 5?
Predicting rare, massive events is hard.
Incredibly hard. Especially, as they say, pricing risk for a wildfire that is burning while you are in the room. These ILWs often have a binary outcome. They either pay out big or they pay out nothing. Getting the probability exactly right beforehand is, well, basically impossible.
And this complexity led to problems for Markel, right? Particularly with Catco.
Yes, it did. They ran into unexpected challenges. There were inquiries about how they set aside loss reserves money, anticipating future payouts, and they had to admit their initial estimates for the bad catastrophe years of 2017 and 2018 were too low.
That sounds serious in a market built on trust. How did they explain that?
They pointed to the unique difficulty. Because of that binary payout structure, a tiny change in the estimated total industry loss, literally $2, they said, could trigger hundreds of millions in payments. So setting reserves perfectly during an unfolding catastrophe is incredibly tough.
Acknowledging the difficulty.
Yes, while also stressing their commitment to integrity and revisiting and re-examining the processes. They had to rebuild some trust there.
And how did acquiring Nephila and State National fit into this?
That was key. Nephila was already the biggest player in ILS, often focusing on risks that are maybe a bit more frequent but less severe than Catco's focus. So diversification within ILS.
Okay.
And State National provides something called fronting. They have insurance licenses basically everywhere. So they act as the official insurer on paper for many ILS deals.
Why is that needed?
It handles all the state-by-state, country-by-country regulations and licensing. It lets ILS managers like Nephila focus on the risk and capital without needing licenses in dozens of jurisdictions. It's crucial infrastructure.
So the combination gave Markel the top market position.
That was the goal, the
Yeah.
broadest platform. And they said they learned a lot from the Catco issues, becoming more sensitive to hidden correlations between risks, thinking harder about climate change impacts.
And were the lessons learned reflected in pricing?
Yes. They noted that pricing for these risks was higher going into 2019. The market, including Markel, adapted its models after those tough years.
A steep learning curve indeed. Okay, let's shift gears slightly for the wrap-up. Markel talks about a fifth dimension, their mindset.
Right. Beyond the tangible stuff.
They describe it as abstract culture, values, beliefs, how they interact, kind of the secret sauce that influences the results.
That's the idea. It's the intangible element that guides leadership and shapes outcomes.
And a key part of this is the not yet philosophy. I like the quote they use. Resisting change is like holding your breath. If you get good at it, you'll die.
Powerful quote. And that not yet idea, it really seems embedded in their history.
How so?
Well, think back. When Sam Markel started, there wasn't really auto insurance as we know it. It was a not yet. So they created it.
Ah, okay.
Later, heavy trucks on highways posed new risks. There was not yet a good insurance solution. Markel stepped in. It's about identifying problems or needs where there isn't a solution yet.
So Markel Ventures fits this too.
Absolutely. Finding homes for businesses like bakery equipment makers or houseplant growers or affordable housing developers. Maybe there wasn't an obvious corporate home for them, not yet. Markel Ventures provided one.
So it's about seeing possibilities where others don't.
Exactly. That mindset, they argue, powers our drive to continue to build Markel into one of the world's great companies, always looking for the next Not yet.
Okay, that brings our deep dive pretty much full circle. Looking at Markel's 2018 story, using those kinds of fundamental questions we talked about at the start,
Mm,
it really does paint a picture of a company trying hard to stick to long-term values, to keep learning, to adapt strategically, even when facing major headwinds like in the ILS market.
yeah, the challenges were real.
But that mindset, that not yet philosophy, seems crucial to how they navigate that complexity and plan for what's next. It's quite a story of resilience.
It really is. And Markel's journey, I think, it reminds us that real resilience isn't just about surviving storms. It's about learning from them, being honest about the difficulties, and actively building towards what's not yet possible.
A good takeaway.
So maybe the final thought for you listening is, what's the not yet challenge you're facing? And what's that fifth dimension? Your own mindset, your own values, that can help you unlock a solution.
Something to think about.
Definitely. Thanks for joining us on this deep dive. It was fascinating material to explore.